Hi, Todd VanDenburg here with VanDenburg Capital Management and another Uncommon Sense update. So, oh my gosh, since the last update, so much has been going on. We had an attempted assassination on our former president. We had a debate between the former president and the current president that didn't go so well for one of them, that resulted in our current vice president then being elevated up to the current nominee for the Democratic Party. And so the election's basically starting over with just a couple of months to go. We've had the head of the Federal Reserve been talking for months and months about, the possibility of lowering interest rates, but only when inflation is under control. And so the interest rate hasn't come down. And every time we get to a new Fed meeting and the rates don't change, the markets get a bit volatile. And that's really what I wanted to talk about today, is sort of what's gone on this week. Oh my gosh, it's been the roller coaster ride from hell. Pardon my French. The federal, or some data came out that showed that, hey, the economy added way fewer jobs last month than anybody had anticipated. And the expectation was that bad data, this is going to sound counterintuitive, that bad data, the economy's getting worse, that would be the final thing that would cause the Federal Reserve to at least tick interest rates down by some nominal amount, maybe 0.25%. And then Chairman Powell came out and said, the data's not quite where we want it. And so, the markets reacted super negatively. And then the doom and gloomers started to come out. Oh my gosh, this looks like it could be the next big correction. And here we are on Friday. And, the S&P has come back almost completely from the large gains fall earlier in the week. The Dow and the NASDAQ's got a long way to go because it just got hammered. And the Dow's probably 2/3 to 3/4 of the way back to where it was at the end of last week. So really what's going on here is just pure market speculation. There's nothing new other than that employment data that came out that said, gee, the economy is softening, and it really is in some ways. The other element that is sort of that adds to this potential problem is the Federal Reserve is responsible for two things. On one hand, they're responsible for the currency, and that's why they're and the value of the currency, and that sort of leads to inflation. So they're working hard on that. But they have this other mandate, and it's employment. And don't ask me why they're responsible for employment. It doesn't make much sense, but one of their stated objectives is to make sure that the country remains, or at least gets to, as close to full employment as possible. And what the data is starting to show is keeping rates as high as they've been now for a year and a half is starting to really damage the labor market. And so the Fed's got some tough decisions here in the coming couple of months, especially ahead of an election cycle. Oh my gosh. You can bet that, one side who wants to get into the White House but isn't currently there, it wouldn't really bother them too much if the economy sort of continued to flounder or the markets continued to flounder, because then they can use that as a, hey, if you elect us, we'll make it better. And then you have the people that are in the White House, or the one who's there and wants to stay there, they would like things to improve, to say, see, things are getting better, you need to stay with us. So the Federal Reserve's got, at this point, a pretty tough road ahead in trying to sort of decide when is it going to start to lower interest rates, and do it in a way that doesn't accelerate the economy suddenly, and not wait too long that all of a sudden jobs are just disappearing. And there's a momentum with that, right? Once jobs start to disappear, then more start to disappear. Just for example, at the beginning of the Biden administration, there were a little over 11 million unfilled jobs in the United States. And here we are 3.5 years later, and now there's just over 8 million unfilled jobs. Now, that's not because they got filled. In a lot of cases, it's just because they were abandoned. You know, employers couldn't find people. Nobody wanted to take those jobs. The employer's view of the economy changed. So those jobs are gone. What I want people to be aware of as we're watching this volatility that we saw this week is all the same stuff that I said earlier on in the year, which is, you know, the market should tend to trend upward, you know, through 2024, but it's not going to be a straight line. And there will be times when the markets, you know, the institutional people with the really big money, if they see that there's an opportunity, especially around interest rates, to push the market down suddenly and get everybody fearful, you know, they use certain financial instruments to make money when the market goes down or when the market goes up. And so if they can influence the market to go down, then they'll make bets that the market will go down. But regular investors, you know, mom and pop investors, they don't have insight into that information, and they certainly don't have the financial wherewithal to influence the markets in the way that institutional traders do. So yes, this week was volatile. It didn't feel good, but if you fell asleep last Friday and woke up today and looked at the markets, just, you know, where was I last Friday? And you wake up today and you look at, well, where am I today? You'd be like, you know, it was a fairly uneventful week. So that's why we have to stay out of trying to make decisions based upon our emotions and our fears or our greed, and really focus on the data. And the data says that in the second quarter, we now have like 90% of all of the companies in the S&P 500 have reported earnings, and something like 80% around there, I think it's 78%, reported earnings greater than what had been expected. And the year-over-year earnings are up a little over 10% year over year. So if you're an investor in the stock market, that kind of data says, well, gee, if earnings are up 10% over last year, then maybe prices should be up 10% over last year. And that's not a guarantee, because, you know, sometimes these things trade ahead of expectations and sometimes they lag. But if you're looking at the S&P 500 or the stock market in general and you follow earnings, you know, the earnings outlook right now doesn't look horrible. Now, again, we're coming up on an election. There's going to be, both sides are going to be trying to scare people out of, you know, why they should be in office and how they're going to make things better for the greatest number of people. And you got to take so much of it with a grain of salt. I will say one political thing, you know, it was actually sort of nice for about 3 weeks when the media in general was really tearing to shreds both political parties. This all happened right after the presidential debate, when both the, you know, quote, mainstream media and, you know, places like Fox News that just skew conservative all day long, they basically were both tearing both sides to shreds. So you could actually watch, you know, the news and feel much like it was back when Walter Cronkite, you know, was anchoring, or you know, when Sergeant Joe Friday said, you know, just the facts, ma'am, just the facts. Because unfortunately, now that President Biden has stepped away from running in for president for the next term, it feels like the media has gone back to what it's been doing for many, many years, which is, you know, the more liberal media, you know, paints the most rosiest picture for the liberals, and the more conservative media paints the most, you know, rosy picture for the conservatives. And so you really got to take it all with a big grain of salt. But data doesn't lie. Statistics can lie, because, you know what, there's an old saying, there's liars, damn liars, and statisticians, right? So you just got to be careful to if you see something that makes you feel a certain way. So for example, if you see some data that makes you feel positive about the markets, make sure that you go back and look at the actual data as opposed to somebody's summary of it. Because people skew this stuff all the time. And that's why that's where I spend the majority of my time, is combing through, sort of raw data, unfiltered by other people. I will listen to what other people say, of course. I mean, if somebody says, hey, the sky is falling, I will look up, right? I'm not dumb. But if I look up and the sky's not falling, I'm going to look around and see, okay, is it falling somewhere else? Like, what am I missing? And in some cases, the media might be telling you that the sky is falling because they don't want you seeing what's going on over there. So again, the markets were volatile this week, no doubt. I expect continued volatility, hopefully not as severe as it was this week, but for the balance of the year. And as we get closer to the election, and if one party looks like it's going to potentially take the White House and maybe Congress, I will have more to say on sort of what my expectations might be for the markets, depending on which party is in control. But for right now, it's not even worth bothering with, because we got a long way to go, and I don't want people worrying. It's summertime, we should be enjoying ourselves, and as I do every day, I'm just sitting here combing through data, trying to make sure that if the big meteor is coming, that we don't get hit by it. So if anybody has any questions about this or any comments, please feel free to give me a call, send me an email, post a reply to this update. I try to respond as quickly as possible. But that was your update. I hope you enjoyed it. If you did, give us a like, give us a share, and I'll be back again soon with another Uncommon Sense update. Thanks for watching. If you'd like to be the first to hear of more Uncommon Sense updates like these, please click the subscribe button below. We'd really appreciate it. Thanks again.